Krishna Sanghavi is with us, CIO Equities at Mahindra Manulife Investment Management. Krishna, great to have you with us here. Thanks very much for joining us. You know, broadly speaking, Krishna, we find ourselves at a bit of a crossroads, right? Or is it a crossroads? How much weight should we put on the fact that, you know, out of the 50% of the companies which have reported earnings, maybe 50-60%, it's tracking pretty well. It's not disappointing, maybe even slightly higher. There are some upgrades here and there as well. How would you rate it?
Yeah, clearly, we have this situation almost every time, right? You're always going to have some set of companies doing exceptionally well, some below par, and that's a little bit, the nature of maybe economy, nature of markets at times, and partly the case of expectations. So if you look at this particular season, clearly the expectations were running a bit low, and so some of the numbers clearly, are surprising from that perspective. At the same time, and if you look at a broad mix, I think BFSI, which did, quite a bit leading the profitability curve for nearly last 7-8 quarters, possibly, is something we right for a change, let's say, trailing the broad market earnings. But maybe commodity is doing the pretty heavy bit of earning growth in this quarter. But it's partly a question of, how YOY was, a year back. Possibly some of these companies didn't have a great numbers, and it's always going to be this, this some sort of a change in earnings, partly driven by YOY and partly by the environment, yes.
All right. Hi, Krishna. Good morning and good to see you. Krishna, I wanted to ask you about an IPO. I think you know which one I'm going to talk about. Much hyped in the market, Lenskart. Plenty of debate out there with regard, but actually the subscription has been very, very high. I think you all as well were participated. Could you tell us, because everyone's questioning the valuations, but it seems the management has a vision and various high pedigree funds as well, they share that vision. So if you could comment on the rationale behind this investment.
Sure. I think, honestly, we don't generally speak on any individual company. So let's look at a broad picture, right? Broad picture is the way Indian economy is growing. There are quite a few new business models coming up. The broad, trend of last possibly 8-10 years, especially post the GST reforms, has been that, organized industry is gaining at the share of unorganized space. So in such atmosphere, when you have a new player, which is trying to be a big aggregator, which is trying to capture an existing market through a market share gain, the one way to look at is a player creating a new market, or is a player trying to get a share of existing market by creating its own, growth plans, aggregating. I think that's one way. Is the business model in terms of past execution reasonably good enough? So that, does the basic tick mark of how we look at companies from a growth and a management perspective. The third piece possibly for any investment decision is really valuation, and that's a tricky part, in terms of at what valuation one decides to completely avoid investing or go in with the investment through a portfolio weight, which is having some sort of early entry, and then look to monitor the company as well as the portfolio weight at various time frame, and possibly portfolio weights can change. So I look at it this way rather than outright rejecting, rather than saying that valuation is expensive. So we look at broadly in that context.
So you're sharing the vision then of the management. As you said, they're trying to create a new market. If I had got a chance to speak to them, ask them what is the cost of setting off, creating that market, because obviously they were saying that the high number of people that test, then the market is growing itself. But that debate for another day. I think on the whole, you believe that some of these companies, maybe they're coming at the upper end of valuations, but otherwise there's a longer term story at play. Would that be fair?
Yeah, essentially it's time frame, and as I said, they're trying to actually get a share of the existing market by replacing some existing players, and to that extent their growth path can be reasonably, let's say, disproportionate to the overall growth in the economy.
Very interesting to see how that goes as well, because, as per their RHP, the underlying total addressable market in India is close to 70,000 crores, which is exactly the sort of valuation that they're seeking as well. But we take your point that if it is a part of the portfolio and the weight on that is managed, then maybe, you can possibly, be a party on the way up and also limit your exposure were things to go southward out there as well. But speaking about all these new age businesses itself, we have the IPO of Grow, which is opening today as well. And then we had the results that came in from Urban Company, where they actually want to increase their investments to Insta Help, which is basically the quick commerce version of what Urban Company is doing already. And then you have Swiggy, which is looking to raise funds. We have Zomato Eternal, which already is sitting on nearly 18,000 crores of cash. What's your approach in all these new age players, and what kind of exposure do you have beyond the Lenskart investment?
We will have some exposure to, some of these companies as part of our portfolios. But I think the bigger issue perhaps is the way Indian equity markets have played out in last 2-3 years, the way investor appetite has grown. I think there are too many companies which are looking to, raise equity capital. That's perhaps the primary role of, equity markets, saying that any entrepreneur who wants to grow possibly gets money from markets. And so that's a much bigger trend. I would like to focus on saying that there are quite a few IPOs coming up, quite a few players looking to raise capital for their own growth plans. And luckily, market environment is quite conducive. Yeah, clearly that has changed the dynamics of market, because if you look at a year back, perhaps, the environment was, quite a bit of demand and not too much of supply of shares from a primary market perspective. Maybe last 6 months have been reasonably different, and we're now seeing a situation where the supply has caught up. Either you look at from a primary market through IPOs or QIPs, or even existing investors selling through OFS. I think that's a bigger issue, which says that yes, finally, supply is possibly seen as catching up on markets, and to that extent, we've gone through this last 8-12 months of consolidation in markets, and hopefully, we now possibly take a new course, and this earning growth in this quarter might just be a good indicator going ahead.
Yeah, no, absolutely. And I think we'll have to sort of wait for some of this stuff to play out as we go along. By the way, Dredging Corp is now given up pretty much most of its gains, opened up with about a 7% pop. It's up about 2% now. Again, it's a small company, so don't want to overemphasize the point, but has had a large move recently coming through. So, there is some other stuff as well, which I just want to quickly highlight. 3M India, I think we highlighted in the right at the word go. It's up 11.5%, and very, very for a 34,000 rupee stock, it's got very large volumes on it. Actually, I'm not sure if there's a block deal or something, but it's the highest volumes in some time on 3M India. So we'll check up on that. TBO Tech, I think Mangalam mentioned, is up about 6%. And I can go down the list. Tatva Chintan, that's up about 4% or so, and so on and so forth. So lots of specific names which are buzzing around in trade. And as Mangalam was explaining to us, Thangamile results and the reaction, Thangamile is up another 11% today, Mangalam.
Yep.
So it's, and of course, Titan Management coming up.
Titan Management coming up, Thangamile, and all these guys, benefit also from Thangamile in particular, as compared to all the other listed companies. They have a higher exposure to unhedged gold. And if your unhedged portion of gold, which has seen a rally of almost 52% in the last 1 year, that adds to your overall, EBITDA margin already, because you've bought gold at a lower price and you're selling it at a 52% higher price. So that's a good margin accretion for them.
Well, in the next 60 minutes, we'll have, I think, 3 Tata Group companies that will be joining in. Tata Chemicals, Titan, and I think Tata Consumer as well later on. Well, we'll thank Krishna for joining in. Krishna, thanks for joining in, giving us insights into the markets, and wishing you a good day ahead. We catch up soon, Krishna. Thanks for joining in.